Hi guys, welcome to our weekly mentorship video. So we're gonna continue with our analysis on dollar index. As you have noted from past 2 weeks, I've been focusing mainly on the dollar. The reason being that I want people to do their work. I want people to analyze the other pairs based on the analysis that I would have done on dollar index. So to begin with, we're going to look at the calendar, like what's coming up in the week. Remember, this is going to help us determine when to expect market volatility. Now, today is past already. We had a few fundamentals from Euro and from the United States. We had new home sales that were not that good for the dollar. That's how we saw that bearish move to the downside. It was because of this new home sales report. Then tomorrow on Tuesday, we've got the core durable goods orders that's going to be released around 2:30. Then we also have the consumer confidence index. That's the release that's coming in at 4 o'clock, just an hour into the New York session. We also have Reserve Bank of Australia Assistant Governor speaking right around lunchtime. Then on Wednesday, we've got the CPI for Aussie dollar. Then we've got the core CPI for Canada, and we've got crude oil inventories for the United States, and the main one for the week, FOMC. So we've got the Fed meeting this coming Wednesday, and that is really going to give us an emphasis of whether what they told us during the June meeting is going to stand forth in the coming quarter or the last 2 quarters of the year. Then on Thursday, we've got unemployment change from Germany. We also have the monetary policy meetings from ECB and the GDP for the United States. Expect dollar to be volatile during that time. We also have initial job loss claims. That's for Thursday. And then Friday, we've got the CPI for the Eurozone. Then we've got the GDP for CAD. Those are the main fundamentals for Friday. We also have German GDP for second quarter. So yeah, that's the week in a nutshell. And what I can see already from this is that we are going to have a very volatile week. Now, that means you need to be careful when you're trading. I'm not saying don't trade, but whenever you get into a trade, make sure your trade has got proper risk management. And if you are already in an active trade heading into a fundamental, make sure your risk on that trade is minimized. Now, looking ahead onto the COT report for dollar index, we can see that the non-commercials, they increased slightly their long exposure just by a couple of 100 positions, and then they also increased their short exposure by a few number, probably just 300 or so points. Then coming to the commercials now, this is where it's interesting. They've reduced their net long exposure on dollar index. These are the commercials. They had 1,081 positions as of last week. This week they've got 825. That's a reduction of almost 250. Then short exposure, you can see they've increased their short exposure by about 1,000 or so points. Now you can see they're not their net positions, they're extremely net short. The non-commercials, they are extremely net long by about 12,000 points, but the commercials, they're extremely short by about 17,800 points. That means they're outnumbering the non-commercials 1:1 Now if we look at open interest, it didn't jump by much, just a couple of 2.7%. Now what does this tell us? What is it that we need to see on the chart, right? When we look at the numbers from the COT report, when we look at the fundamentals that we've got, then we go to the chart, right? For us to be able to come up with a framework of what to look for in dollar this coming week. As you have noted, we have seen dollar finding resistance inside a weekly bearish order block from last week, and the current month and previous month of May, the high of May and the low of July, we've got a fair value gap, right? Market is extremely bullish. Dollar is strong right now on a higher time frame point of view, but we should not ignore the downside probabilities that are there right now in dollar index, as we have seen that we are finding resistance right up at the ceiling where the bearish order block is on the weekly chart. But when you look at the monthly chart, you can see we are extremely bullish. Now if I just zoom out a bit, you can see the low of I think it's March 2018 and the low of January 2021. As long as price is still above this trend line formation, as long as we have price above this price point, expect dollar to move to the upside. Now, where are the opportunities? Where do you get to capitalize now on the movement to the upside? Now, this is when you need to define your discount array. Right now, we can see that last week's low, right? The low of last week, which is being shown here with the dotted line. The low of last week coming in at 92.50. We've got a liquidity pool of sell stops internal range that's on the weekly chart. I'm expecting this week to trade through 92.50. That means I'm bearish on dollar this week, but overall on a higher time frame, I'm looking for dollar to go to the upside. But that doesn't mean we should not get bearish candles like you see here 3 weeks ago, 6 weeks ago. We had a down close weekly price action. Now, once price trades below 92.50, right? Now, depending on the fundamentals that are coming out, once price trades below 92.50, if we get positive news from the Fed, if the Fed keep on sounding like hawkish as of last month's release, then we could see dollar push to the upside. But from all the news that I've been reading, all the fundamentals, the releases, we could see a short-term dovish signal from the Federal Reserve. What does that mean? It means we could see dollar trade lower up until 92.14. We could see dollar trade back to this loss here. That is if we get hint that they are pausing a bit on their bond buying, they are not starting tapering. But once we get the Federal Reserve emphasizing more on their bond buying program, on their tapering program, then we could see dollar taking out 92.50, right? 92.50, we've got sell stop, liquidity pool in internal range. We could see dollar move to the upside, targeting last week's high. You see, we could see dollar move and targeting last week's high, which came in at right around 93.195. Now that's the trade that I'll be looking at I'm going to be looking for long positions. I'm not going to trade dollar to the downside. No, I'm not going to do that. I'm going to wait for price to reach my discount for me to trade long. Yes, right now where dollar is, it's right at an area of strong resistance, right? So you could have a strong argument to say, no, we can keep going to the downside, but this downside move is only valid if we get a hawkish Fed report. You see, if we get to hear Jerome Powell talking the same kind of tone that he was speaking about when he was in a Senate hearing, then we could see dollar trade lower. You must listen carefully, guys. It's not a case of saying you're gonna trade randomly. You must know what's going on for you to make a decision to say you're going to trade long or you're going to trade short. So basing on the fundamentals that are coming this week, prior to FOMC, dollar is gonna fall, right? But I'm really not sure if we're gonna get much of a difference on the Fed report from the June report. Now, with that said, if I'm not anticipating any difference, any much difference, I expect them to really emphasize their point about tapering, which could come as early as September. I expect dollar to trade lower heading into FOMC, right? 92.50, there's a liquidity pull off sell stops on the weekly time frame. Then we could see a move to the upside with a target of 93.196. That's my outlook on on dollar index. Now, when we go to lower time frames, right? When we go to lower time frames, we can see this is our daily chart. We are not that far. We're only like 20 pips from 92.50. You see, so it's not an insurmountable number of pips which you can say, no, price is not gonna reach. We could see further move all the way into this weekly bullish order block right here, 92.14. That is doable in terms of price heading to those lows, because we can see how 92.87 is providing what? Resistance, which is our weekly bearish order block. So right now, once price clears 92.50, I'm not sure when it's gonna clear that price action. You need to jump onto the fundamentals and understand what is going on. Is the 10-year yield finding support? Are we trading above 1.25 on the 10-year yield, right? If the yield keeps on dropping heading into FOMC, right? If the yields keep dropping, then you're gonna see dollar trade lower to the downside. That is a fact. You're not gonna be going against that. So once that happens, yes, you can capitalize on that. When dollar is trading lower, you're going long on Aussie dollar, New Zealand dollar, Euro USD, Pound USD. But I'm not going to talk about those ones. That's your homework now, because I need people to be doing their own analysis. So on daily chart, we can see that 92.50, the liquidity pool that's there, price will likely trigger it, right? But now, depending on that price action, what happening during that time, we should be in a position to define whether we should go long or target 92.14. That's our weekly bullish order block. Now, if I go to H4, right? Now, on H4, you can clearly see now. So that's 92.50, the dotted line, my weekly trend line. And then we also have this H4 bullish order block. Now, this is crucial now. We can see price trade into 92.35 which is like the equilibrium point between 92.55 and 92.14. That's like the equilibrium point. So on H4 you should see price trade lower. If we take out 92.50 and close above, you see, if price trades below 92.50 and close above, that's your trigger to go long. But if price trades below 92.50 and close below 92.50, then expect an expansion all the way to 92.35, right? 92.35, break and close above, you are going long, right? But 92.35, break and close below, price is going to 92.14. So take note, this is H4 time frame. If you get an H4 candle that trades through 92.50 and close above, that's a signal to go long. That would have been a stop hunt below 92.50. But if that candle trades through and close below, that's a breaker to the downside, targeting the next liquidity pool right around 92.35. So I hope you're understanding perfectly what I'm trying to show you here, guys. So 92.35 is also an ideal area to hunt for long entries, and 92.50, a break and close below, price is going to the downside. A break and close above, we should see a move to the upside back to 92.87. Ultimately, if FOMC does provide us a very negative sentiment regarding the dollar, then we should see price move all the way to 92.14. And if that happens, then you have to capitalize on that move on the majors. You're going long because the majors, they are going to gain momentum. And when it comes to institutional pairing, you are looking to buy currency pairs that have got higher interest rates against currency pairs that have got lower interest rates. So yeah, this is what I wanted to share with you this week. Unfortunately, I'm not gonna do euro, I'm not gonna do pound. That is your homework, folks. You have seen how I have broken down the structure on dollar index. Now you have to do the same on the pair that you're going to trade. Yes, I'll be giving you hints and setups in the group during the course of the week, but make sure you also do your part. Analyze the pairs. You have seen how I've done it on dollar index. Now link it up to USD-JPY, USD CAD, USD CHF. You see those majors. I'm not saying look at Euro-JPY or GBP-JPY. If you decide to look at that, yes, that is for your own practice. But what I've done with dollar index, link it to the 7 majors. Now, one other thing that you have to take note of, right, is the 10-year yield. You can see the futures market, strong bullish. That's why we're getting a very negative dollar. I was expecting the yen futures to trade low here. They jumped by 0.14. Yeah, not by much. They should have traded lower. The yen futures should have traded lower. But you can see all the majors, they're trading to the upside. And if you come to the bond market, you can see the bond market is also slightly bearish. And the yields, they've been gaining. The 10-year is right now at 1.29. Now that's crucial. 1.29. It has gained not much, plus 0.36%. But for the day, it's already plus 0.62. At one point, the 10-year yield was almost 1.22, if I'm not mistaken. It was sitting right at 1.22, which was very negative. You see, those are negative territories when we're talking of the bond, the yields that's negative territory. So let's go. You can see this daily candle here on the US 10-year yield. At one point it was a huge bearish candle to the downside. Now look how price is coming back up, right? The yields are gaining. Now where is dollar? Dollar is right. It has just left that H4 bullish order block that I've marked. It has moved to the upside. How many points? A couple of 10 basis points. So this move to the upside on the yields, 10-year yields to be specific, is now causing dollar to find support. You see? So it's crucial that you keep an eye on the 10-year yield. Let me go to the H4. You can see on the H4, let me zoom in. You can see on the H4 the yields, the past 8 hours, they are bullish, right? The past 8 hours. So expect dollar to trade to the upside for the next, probably during the Asian session. Expect dollar to trade higher, right? They have already given you the forecast for tomorrow's day trades. You see, expect dollar to trade higher during the Asian session, probably part of London session. But when you look at the calendar, let me go to the calendar quickly so that you can see. So let's see tomorrow. What do we have tomorrow? We've got the core durable goods orders. They said they're going to be, I don't think they're going to be positive, this number. Durable goods orders. Who's been ordering? Nobody. So yeah, expect dollar then to trade lower if we get a negative number here. But if we get a positive number, which is the forecast, right? They're forecasting a very positive number, but not much. They're forecasting a negative 0.2 on the durable goods orders for June. So that's what I want you guys to do. Be in a position to link these three concepts that we use. The calendar, link the calendar, link the 10-year yield. You can see already the yield has gained. And if you come to the monthly chart, we have filled now the fair value gap to the downside. Price is now finding what? Support. So the chances of a strong dollar, they're still very high, but that's now gonna depend on the fundamentals that we are gonna get, especially the FOMC report, what the guys talk about. If there's more emphasis on bond buying, right? If there's more emphasis on bond buying from the Fed, if there's more emphasis for tapering, which is highly likely, they might even start maybe towards September or something like that, then we should see dollar trade higher than 93.196. So yeah, that's the forecast for this week's, guys. So make sure you do your homework, and if you have any questions, make sure you send me message on the group so that we can help each other in understanding what this price action will be telling us. So yeah, if you haven't subscribed to the channel, guys, unfortunately you're only gonna see this video Thursday, probably during New York session. Since we've got FOMC, we normally get Thursday, very volatile, right? So yeah, I'll only release it Thursday heading into New York session. So if you want to receive this weekly forecast, which is meant for the members, just send me a message, Telegram, WhatsApp, email, or whichever contact that you can use, so that you can join the mentorship and get to benefit from some of these membership packs. So yeah, that's pretty much about it, guys. And if you haven't subscribed to the channel, make sure you subscribe to the channel and make sure the notification icon is selected so that you receive some of the free videos that I upload on the channel, and also so that you get notification once this weekly video is live on Facebook. So yeah, that's pretty much about it, guys. So I wish you guys a very profitable week, and All the best. Thank you.